If you're thinking about buying a house and you're shopping around right now, I need you to stop and watch this video because I'm going to give you one thing you have to pay attention to when you're looking at your loan estimate to see if your lender's ripping you off or not. My name is Seanu Uyehara. I'm with Geneva Financial, and if you need help on getting your mortgage right, that's why I created my channel. You can always hit the description below. There's links on how to get a hold of me. Myself and my team, we're happy to look at any loan estimate to make sure that you are getting a good deal on your loan. And if you need us to help you finance your properties, we can also do that too, because Geneva Financial is licensed in 47 states, and we'd love to help you and your friends out. So make sure to share my channel with any of your friends and family. Now, so many clients have called us lately and they're asking us, hey, what's your rate? What's your rate? And they're shopping around. And I know everybody wants a good deal today, but a good deal, in my opinion, varies from person to person. Some people don't necessarily care about getting the lowest interest rate. Some people, that's all they care about is I need the lowest rate, the lowest cost in order to buy my house. So if you're calling around to a bunch of lenders, these are some tips that I would give you to make sure that you are getting the best deal possible. Tip number one is when you shop, you need to shop on the same day. And what I mean by that is if you call a lender on, let's say, Monday, and they give you a quote, that quote is typically gonna be good for to the end of the day, because the next day when the market opens up, things will adjust based on what happened on the previous day. Therefore, that quote that you got is null and void. So if you're shopping around, you have to make sure that you're calling every lender on the same day and getting that quote on the same day. Because if you wait a day or two, that could easily move, and then now you're looking at inaccurate information. Therefore, it could potentially cause a mistake for your purchase because you had inaccurate information that you made a decision on. So first and foremost, make sure you shop on the same day. Now, here's one of the most important things that you have to look at. You have to get a lender to give you a loan estimate. Don't just take it over the phone. Don't take it through an email. Have them send you an official loan estimate. Any lender out there can provide that to you. And what you want to look for is a section where it says discount points, because most lenders are charging discount points today. Because this is how the game works. When you call a lender, most lenders out there are inexperienced and they're just going to say, well, hey, today's interest rate is, call it 7%. And you're going to think, oh, that's too high. Click, you're going to go call someone else. And for a lot of these loan officers that are out there, they may just quote you a rate over the phone. But what they're also not telling you is that how many points that you're having to pay to get this interest rate. Why? They know that you're shopping them. It's literally like me trying to date a girl, but yet I'm talking to 10 other girls out there. The one girl, if she knows that, she's not gonna pay attention to me. And honestly, she probably doesn't even care about me anymore. And that's how most lenders get, because they know that you're calling them literally to get a rate, and you're probably gonna call 4 other lenders after you get off the phone. So they're not gonna give you the time of day, or they're gonna be short with you because they wanna spend their time with clients that they're actually working with. So try to be respectful if you're working and shopping around with a loan officer. Now, when you get the loan estimate, the reason why you want the loan estimate, because it's going to detail what they're actually charging you. They may not cover any of that over the phone. They may not cover any of that via email. So you want that official document that shows how many discount points you're paying to get that interest rate. Now, here's the problem as a consumer. When you call a lender and you say, what's your interest rate? They're typically going to quote you something really, really low. Why? Because I know you're shopping me. So of course I want to try to get your business, and the only way for me to do that is to tell you I got a really low interest rate that you're probably going to say, oh my God, that's great. Let's go ahead and do an application. Now I got you. I'm gonna pull your credit. I'm gonna take you down this whole dog and pony show. At the very last minute, I'm gonna show you what your loan estimate is, and you're never gonna realize that someone was charging you all these points to get that interest rate. This is why a lot of loan officers got a lot of flack over the years, because so many people in the industry were not being honest to their clients up front. Now, obviously, a lot of things have changed since the foreclosure crisis that happened back in 07 and 08. So there's a lot of checks and balances built into the system today that you as a client have to acknowledge what's going on. So you really can't say you didn't know unless you were just oblivious to signing all the loan documents and estimates that you get once you get your offer accepted. So make sure you get a loan estimate, number one. Number two, look at the discount point section. That is the most important part, because it's going to tell you how many points or percentage points that the lender is charging you to get the interest rate. It's kind of like prepaid interest, where you're paying some of that money up front to get a lower interest rate. Here's where the problem then comes up, is that a lot of times when you get quoted an interest rate, you call another lender and you just think that because they have a higher rate, it's not a good deal. But you have to look at the overall picture as far as the points that are being charged, because let's say the interest rate is 1/8% higher, or maybe 1/4% higher, but it saves you $3,000, $4,000, $5,000 in closing costs. That's a good deal. Taking the higher interest rate may be a better deal because one, it's less money out of your pocket, and two, you have to remember this. When interest rates come down, you will most likely refinance. I know every person out there that has a 6 and a 7% interest rate. The day that we see 5s come around, every mortgage lender is going to be calling you, trying to get you to refinance. As long as home values did not erode and your loan to values are still intact and you can still refinance, trust me, you will probably refinance. So all of this money that you're spending up front today, because you're so rate conscious and I need the lowest interest rate, you're literally wasting money, because the thing you have to look at when you look at the discount points is what's your break even. You have to figure out that number, because if you're looking at multiple strategies on how to finance a house, several strategies can cost different amounts of money. Now, the difference between the payments might be very, very little, $25, $35, $50 a month. Not a big deal, but it might save you an extra $2,000, $3,000, $4,000, $5,000 in closing costs. So basically what you want to do is divide those numbers, the monthly savings, by the total cost, to figure out the number of months that it's going to take you to recoup that cost. If you plan to sell or refinance your house within that period of time, you are throwing away money. This is why I've always said this on my channel. The lowest rate is not always the best deal. You have to look at the strategy, because most loan officers out there will gladly quote you the lowest rate and charge you the most amount of money just so they can close a deal. They could care less. You're just another number to them. But this is why you have to look at strategy. And to me, the strategy is far more important than getting the lowest rate. And the prime example of this is, I remember this one client that I did a loan for in Texas. This guy grinded the heck out of me to get the lowest rate possible. And I think when we did his loan, we got him somewhere probably like 2.5%. He paid some points, but we got him a 2.5% interest rate. And then you know what happened? This dude called me a year later saying, "Hey Sean, I want to refinance my house." And I was like, "Why are you refinancing your house?" He's like, "Well, I need to do some work to the property, and I want to pay off some debt and this and that." But I was shocked, because when we did his loan, he was so adamant about, "I need 2.5%. And now he wants to refinance to a higher rate. So this is why you got to be thinking about the next 2 steps, or your loan officer should be asking you those questions. And if they're not, maybe you need a second opinion, because if you're just so focused on one thing in order to get your house, there's probably 5 other things that you're not thinking about. Just like in that client's example, he was willing to forego the low interest rate that he fought me on to take a 4 or 5% interest rate at the time. So obviously there's other strategies that we can look at, but if he didn't call me, I can guarantee you any other loan officer out there would have taken him for his money. So make sure that you're doing some homework. If you're shopping around, shop on the same day, and make sure you get the loan estimate. If the lender doesn't want to give it to you, go find somebody else to work with, because that is something that you will need in order to make the right decision. And remember, look for strategies. Have them give you 2, 3, 4 options if they can possibly do it, so that way you know what's best for you. And if you ever need a second opinion, that's what I'm here for. You can always send me an email, reach out to me. I'd be happy to look over your estimates to make sure you're doing the right thing. And if you want me to do your financing, we can certainly do that as well. I'd love to work with you, and I appreciate all of you that call me, text me, or reach out via email. I always get excited to talk to you guys. And thanks for watching. I'll see you on the next video.